Welcome to Rogue Trader. Please read the disclaimer and remember that prices can go down as well as up. So today I'm taking a look at Ceres Power Holdings. Ceres Power Holdings began as a Imperial College London research project, but they now have over 240 employees. They have IP to their steel cell technology, which they own and license out to external manufacturers who can then market products with them, and then they get a return in terms of royalties and in development costs. Their technology is essentially solid oxide fuel cells. These are put together into stacks that are used in homes or in transport or in grid rebalancing units to convert methane gas into electricity and heat. Current IP is all based around this solid oxide fuel cells, but they're also going to develop solid oxide electrolysis cells, which will be used for converting hydrogen into electricity and heat. They just built an £8 million factory, which is based in the UK, and this is going to help them with small-scale production to support their commercial activities. They've got systems up to 30 kilowatts. They say that their fuel cells are 60% efficient, which is better than conventional gas turbines. And of course, they don't produce any carbon emissions. They only just recently raised 181 million, and this is going to help them with their future plans. So their current fuel cells can be used for heating and providing electricity for commercial and residential buildings. They're specializing also in data centers, and then also for transport there's some projects where there's hydrogen powered cars, trucks and trains. Finally, they're looking at grid reinforcement. They've got massive partnerships with Bosch in Europe and Weichai in China. And with Bosch, they've already done prototype manufacture, and they currently have a fuel cell production project with them, where Bosch are now planning to, by 2024, they should be actually selling finished products, which will be for fuel cell power generators used at power station factories, data centers, and also EV car refueling points. So as you see, once they've signed a deal, they take in so many million every year as they support the scale up of the technology, and then they will then earn royalties once it's a finished product. With Weichai in China, what they've done so far is there's a project with 10 buses, and that's bringing in 9 million till 2020. But then the next stage of their partnership with Weichai should bring them in 30 million, but I'm not sure over what time period. And they've set up a joint venture with Weichai, which I'll go into later, but then that will produce dividends from 2025. So then, as well as Europe and China, where they've got these quite impressive partnerships with Bosch and Weichai, in Japan, they've got deals with Miura, and they've already actually launched a product with them of a 4.2 kilowatt modular combined heat and power generator. It uses their solid oxide fuel cell technology, mostly for commercial use. And then in South Korea, they've got a deal with Doosan, who are another one of their partners, and they're actually currently building a 20 kilowatt system, which will be a fuel cell power generation system aimed again at commercial buildings. So you're just converting methane into energy and heat where it's needed. And they've got 8 million for that, for their 20 kilowatt system, coming in up till 2021. And then Doosan are going to be commercially producing these power stacks using the Ceres Power Holdings support and IP, in a deal that's going to bring in 43 million up to 2024. And then, of course, once the final product's been rolled out, they'll be getting royalties on that. So it is quite impressive that their technology, which converts methane gas into electricity without creating any emissions, is currently being made at a commercial scale. They've got kind of far-reaching projects in place in these areas around the world. You can see here their roadmap and how their technology is really being used, where it has actually gained traction. The main successes so far is definitely in the use of methane to generate electricity and heat for commercial and residential users. And then when Bosch are actually producing the finished products, it should then maybe spread out to some of these other use cases as well. In terms of using hydrogen, this is actually only in the proof of concept stage at the moment. However, you've got people like ITM Power producing the hydrogen, places where the electricity would otherwise be wasted, such as at wind turbines. So Ceres Power then offer the second part, the complementary part of that system, where they can then take that hydrogen and use it to produce electricity for grid rebalancing. So when I look at the share price, there's exactly the same trend that we saw with ITM Power and a lot of these other renewable plays. The real news flow came in around 2020 when we had the EU Green Deal promising $1 trillion to be flowing into renewable projects. And then Boris Johnson promised at the end of 2020 $1 trillion to go into renewable projects. And then, of course, Joe Biden came in with a $2 trillion pledge to plough money into forcing a renewable future. So all of the governments of the world are putting lots of money in and doing other things like subsidies and all kinds of penalties for anyone who wants to burn any carbon, which really is forcing the issue, and it really is going to create, by government intervention, a renewables future in a way which the free market wouldn't be doing if it was left to its own devices. However, this does mean that I've actually missed the Gretta Gold rush. Obviously, you really would have wanted to have come in around here. And we can see through these news stories that actually the real bull case for Ceres was already in place in 2019. So I can see how if I'd looked at this stock then, there would have been a lot of things in place to convince me to buy them, and then that would have been the right time to buy, just from eyeballing the chart here. So they began as a Imperial College London project, and the share price, at least at this scale, was kind of bumbling along. And their first big milestone was in 2017 when they did their first trials in the UK, which proved their combined heat and power generation model for their steel cell fuel cells in the UK. Then they got their first partnership with YHA in the middle of 2018, who bought 10% of the stock. Then in mid-2018, they did a 20 million fundraise, and then shortly after that did a stock consolidation. Now what's really interesting is that when you zoom into the price there, you see that even though the stock was consolidated 10 to 1, you'd expect the share price to then go up tenfold, but it only doubled. So, that there would have been presumably a buying opportunity just from that. Then shortly after that, YHA bought some more shares, and Bosch entered a partnership with them and announced they were going to buy 9 million's worth of shares. Then at the end of 2018, they entered a more formal partnership with YHA, where YHA were going to do this EV bus trial. So they've got 10 buses running around with their range extension power cells in them, and announced they were going to create a new joint venture. Now this new joint venture is like a company that they're going to set up where YHA perhaps are 51% owners. And then what will happen is this new joint venture this will be a factory built in China to build their solid oxide power cells. And then Ceres Power will then get paid back dividends from this joint company, and then that's how they'll get their money back. So YHA also bought 28 million's worth of shares to then get a 20% stake. The products I discussed, Miura in Japan and Doosan in Korea, were developing. They both came into fruition in 2019, or at least the deals came into fruition. So this is where I was saying at this point here, there was a lot of really good news flow. You could have gone in there at a very good price. And then at the beginning of 2020, that was when Bosch then came in. They bought 38 million of shares to boost their stake up to 18%. So it really is very impressive how these, there's so much interest from Bosch and YHA. These are very big companies, and they now both have about 20% of the total stock each. So this commitment by these companies and the fact that they're setting up factories to in the future sell Ceres Power IP products really is a very strong indicator for Ceres Power. Since then, the only news has been some more stock placings. They raised 54 million in 2020, and then following their full year report in March 2021, they then raised 181 million for just 10% of the total shares in issue. So they took advantage of these crazy valuations here to get a lot of money in for really, for only 10% of their share capital. And finally, the latest news in was that Doosan have now created a new enterprise to develop marine solid oxide fuel cell stacks, which are going to be used as the engines in oil tankers. So superficially, it all looks really good for Ceres Power in terms of all the projects they've got going for them. However, of course, as soon as I look at the profit and loss, it really doesn't look so good. Their revenue, what makes them better than ITM Power actually, is when you look at their revenue, that really is climbing up at a rate. However, their operating costs are also increasing. And when I looked into the annual report, I saw that the reason for this was mainly increased R&D spending. That's the majority of their operating costs. So at the end of the day, although they are ever increasing sales, it's going to be well into 2025, 2026 before maybe the sales start climbing to a much higher level where they're no longer treading water. And we have to really accept that these are big losses every year. They're losing money every year in order to develop the product pipeline for the future, and that's with these big backers who are involved with them. When we look at the net income graphically, we see a nasty trend, and we see a widening between their expenditure and their income in the wrong direction. We like to see normally a widening where the income is above the expenditure, but this is the worse. This is the other way around. So that doesn't look good. And so when you're, when you're investing in these, you're believing in this longer term story that then in the future, eventually they'll be making money on a yearly basis. You can see how there's little interest in their products in North America. And I'm guessing that's because there's probably rival companies doing a similar thing in North America. That's just my guess. But you can see there is good traction in Europe and Asia. And in terms of their sales, those are upticking in a way that ITM Powers weren't. So that's very positive. And you see the future estimates here. Not so impressive because by 2022 it's still only 30 million, and they're spending that every year now. So you're particularly when you then look at the tender pipeline dropping, it's visually such good impact, good news stories here, a good background story with these partners and these things that they're actually making. But when you look at the numbers, it really doesn't look good, and you kind of can't see where they're going to start making money. I mean, you've got to project forward to 2030 or something. They're making the kind of sales to justify the price. I looked at their analyst conference call they released with the full year 2020 data. They did show how in the future they were going to start earning royalties from these products that they were building, these product lines that were being developed by Bosch and Doosan and YHA. And then there would be royalties as well as the license fees and engineering services. And then also they were going to move into hydrogen products as well. So hydrogen electrolyzers. So that would also then boost their revenue growth. But it's all kind of, the future revenues are kind of jam tomorrow still. They're having to spend lots of money now in terms of research and development to then hopefully sell these products in the future which haven't met commercial development stage yet. When I look at the assets, it's fairly sort of minimal. You can see how they've got this factory now, which they built only last year to help them with supporting the tech transfer of their IP to these manufacturing sites around the world. And that's obviously then helped increase their property, plant and equipment. And there seems to be lots of short-term investments, which seems to relate to their tech transfer activity and their licensing out activity. I think it's stuff like them building manufacturing tooling and stuff, and at the stages where the products are still being developed. I think that Ceres were involved with the investment in that at the earlier stages, and then they get their money back in product development fees and things. The most significant thing really is they get lots of cash coming in from their capital raisers, and then this is then getting reinvested in the company. This is the 2020 data. But then, of course, they then raised 181 million only in March this year. And so this is then going to considerably boost their net assets position to what I estimate to be 281 million. So that's very impressive. Now, they made a big point, their financial director made a point of explaining how they've already got cash from previous fundraisers to deal with their burn rate for a few years. But this extra 181 million fundraising, actually a quarter of that's going to be used to further grow their solid oxide fuel cell technology, which is already being developed obviously with Bosch and YHA and Doosan. And then 55% of that fund, so that's 100 million, is going to go into the new hydrogen product range. So currently the hydrogen, all their stuff that's actually at commercial scale is their solid oxide fuel cells. And that's obviously burning methane to produce heat and electricity. But what they want to move into solid oxide electrolysis cells, which are going to be used to generate hydrogen. So this is actually them moving into the space where ITM Power currently operate. They say they don't actually have to change their existing products much to then use them for burning hydrogen. But this does fit well into the overall plans that the governments and the utilities are pushing for. The thing is, in some ways, it's like a risky unknown whether they'll be able to achieve that or not. And that's 100 million of their 181 million going into that. And they have the whole roadmap here where they're planning to build a prototype system by 2022 and then have a full commercial systems in place by 2025. Now, it's great that they're moving into this space because we know from when I looked at it, for example, the National Grid Future Energy Scenarios document, we know that hydrogen is expected to be a big part of the renewables future. So it's great that they're moving into that, but then you have to say that, there is risking that. We don't know how well that will play out when companies like ITM Power, for example, were there already. So looking at their statement of cash flows, and in 2020, they got 57 million from issuing shares. And then they had a 2 million loss from operations, and they ploughed 37 million reinvested back into the company, like I was kind of explaining here, and 9 million into capex. So the story is they're a speculative startup. All their money is from issuing new shares. They're totally loss making, and they wouldn't be able to survive unless there was all this money, all these people quite willing and excited to invest in them when they do share issues. But ultimately then all that money from capital raisers is just going into running the company at a loss and investing in their products to hopefully build the company up and the product line up to a point where it's actually profitable one day. The equity and valuation was extremely interesting because the first thing is we had the stock split. Sorry, the first thing is we had the stock consolidation of 10-1 in 2018. And then we see this here, how actually their market cap was very low because the share price didn't go up the way it theoretically should do when you eliminate 90% of the number of shares that there are. So obviously this goes into, wouldn't it have been great to have been looking at them back here, and haven't I missed the gold rush here? We then see though that obviously we had this massive spike up. But then they did this capital raise, which raised 181 million. And to my calculations, you can see like the cash boost up, because what I've done is, so here's my calculations here, and we've got the numbers as they were when they did their annual report for 2020. And then what I've done is I've done the situation for 2021. So for that, I've used the shares in issue and I've used the current share price. And so I get a market cap of 1.9 billion. And for my calculation, you know, that extra 181 million coming in, that means that their price to book based on their net assets should now be 7-1. However, according to Reuters, their valuation is 15-1. When I look at HSBC, they're saying that their price to book is 16-1. So I double checked my numbers, and this is the Ceres Power website. And when I looked at their fundraise RNS, it was quite clear that, you know, they'd raised an extra 17 million shares, but they'd gained 181 million, and this now meant that they had 186 million shares in issue. So my number here is correct in terms of the number of shares in issue. And the share price is obviously correct. So why is it that I have a price to book of 7-1, but Reuters has one of 16-1? The only thing I can think is Reuters do have the number of shares in issued updated, and they have the share price updated. But when it comes to the financials, they use in their calculations, which then creates the price to book number, they use their latest IFRS statements. And because that came out before the capital raise, they therefore don't have this extra 181 million included in their price to book valuation. So this is very interesting, and I think that that's a little example of where doing loads of homework has given me a little bit of an edge on anyone who was evaluating this stock, just looking at the easy to get on the internet numbers, because maybe I've made a mistake here, but based on my calculations, I do think the price to book 7-1, and that's a nice incentive to actually invest in them, because that makes them a lot cheaper than other companies in the sector. So of course, talking of the sector, and there being the massive boom, how much money came rushing in to these speculative renewable stocks, and you see the prices jump up here across the sector. And so that's a bit of a negative, but at least with these, with the that price to book valuation, they look generally good value. They look good value for the sector. So looking into the long-term feasibility of their business model, I'll quickly go over the hydrogen story and the renewable energy story. Obviously, like I said when I did this before, most of renewable energy in the UK is going to be wind energy, because you only get wind energy when the wind blows and more at night time. That means it's always in the wrong places, and the electricity generated at the wrong times to when you actually need it. And so this is going to mean there's going to have to be a lot of grid rebalancing going on, and they're going to need to do things like take that energy that would otherwise be wasted and convert it into hydrogen. When we look at the UK electricity generation as a whole, you see how wind is most of the renewables, and the main thing is natural gas. And so you can see how Ceres could actually help take this natural gas, which is probably still going to be a requirement for quite some time, and then actually use it to generate the electricity cleanly by using the Ceres power units in residential areas and at industrial sites. That could be a good way of attacking this problem of how much natural gas, which is actually the natural gas is the last baddie we have left in UK electricity generation. And when we look at the energy use overall in the UK, we see that the biggest baddies are natural gas and oil. So you can see quite clearly how the Ceres Power products can help alleviate that problem, along with more wind and renewable energy. And also the oil, unfortunately, will get attacked mainly by electronic vehicles, but that then creates massive problems in all the extra electricity that's going to be needed. And so Ceres Power have got a roadmap going to help alleviate that excess electricity problem by using methane gas for these use cases, as well as maybe using hydrogen in the future once they develop that. And I looked at the National Grid Future Energy Scenarios document. Now, National Grid produce most electricity and provide a lot of gas supply to England, and so they are obviously experts in this. But the thing is, what was clear from looking at their reports was they don't really know for sure what bigger part hydrogen really is going to play. And they have this lovely document here where you can look at the different scenarios they've predicted, and they really don't know, how much hydrogen's going to play. In this case, a lot more than now, but not so much. In this case is interesting. They're looking at reforming the methane, and so you could see how here, for example, if this scenario played out, but with Ceres power units being used to convert methane into power for industrial use, residential, and a bit of transport, you can see how Ceres power could be a real kind of, massively performing stock in the future. But the fact is, there's kind of a risk element. The fact is, no one really knows how it's going to play out. But one thing for sure is hydrogen is a key part of how the government's thinking and how the electricity utilities suppliers are thinking. They're all thinking around hydrogen at the moment. But what I kind of like about Ceres Power is that what I think could potentially happen is they go for these hydrogen use cases, but then they're not actually practical in the future. So then they end up just burning methane, but not burning it, they end up using methane, but using Ceres Power's technology to make it a lot more environmentally friendly. And that could be a kind of compromise that the world kind of then ends up moving towards. Perhaps the hydrogen is just like a pipe dream. These methane gas use cases could end up saving the day. And then with their push into hydrogen, Ceres Power are actually kind of covering both bases. So in conclusion, there's a very impressive background story for Ceres Power Holdings. And there is a nice pragmatic kind of roadmap here. They're using this abundant methane gas, and it does interest me that that could end up being the way forward in a way that all of the environmental people weren't expecting. There is a good story in how this company's been developing, and then they are actually planning to cover both bases by moving into hydrogen as well. You still definitely have to consider them a real speculative play and take note of the current jagged down price trend. But I really like this thing I noticed with the price to book. So I've decided that based on the current price to book ratio and product news flow, these are definitely the best play I've found so far on the renewables future, and I'm going to consider them as a highly speculative play, acknowledge they're not going to make much money for many years, and I'm going to take a look at the share price and just wait to see it kind of stabilize a bit. I want to see if this continues down a bit more. So then I'm going to consider them against other opportunities in my shortlist, and then I'm going to add them to my shortlist. This is my shortlist at the moment. To be honest, most of these I'm really not even lukewarm about at the moment, only actually Cranswick, but I'm still looking at some other stocks, but they're in there in consideration. And I'm going to kind of bide my time a bit. In the next month or two, probably buy my next stock. If I would buy them, then I'd plan to treat them like a speculative play. So then if they go up 2 or 3 fold, then definitely sell half to trap in those profits, and then just hold them long term until the company matures. The macro strategy isn't really relevant because I'm only 13% in stocks at the moment. The sector obviously looks bad at the moment, so that's why I want to mitigate that by hopefully the price going down again a bit. The financials are quite clear. You'd want to, in the next 5 or 6 years, see this trend reverse, and so that they're actually making money, and you're seeing the income widening away from the expenditure, not the other way around. And then longer term, you'd have to be assessing, is methane, is the use of the steel oxide fuel cells really becoming part of the Z0 story as anticipated by Ceres Power? And then you'd have to consider the hydrogen product lines, because this is actually where they're putting half their money into at the moment. So the uptake of that is important as well. So that completes my look into Ceres Power Holdings. And certainly of all the ones I've looked at so far from the Gretta Gold Series, they're certainly the best ones so far. But I'd like to get a few more into the mix and just see if their share price settles a bit before I go into them.